Hello guys, you are welcome to a new video analysis video. My name is Somi Abdul, and I'm looking at Euro Japanese yen today. Last week, Thursday, um I looked at Euro Japanese yen and I shared this chart on the screen with us, where I was able to explain or establish that the current correction we're having is completing a zigzag pattern, right after price ended a bearish impulse wave that lasted between November and December last year, and we've been able to see three wave correction afterwards, which we've been able to label as an ABC rally, that is a zigzag, whereby the first leg was an impulse, the second was a flat, a running flat, and the third was expected to be an ending diagonal pattern with invalid point around 161.6. So which means if price was able to push above 161.6, we will have to admit that this is not a diagonal pattern. We have to just look at, although it will still be a corrective pattern, but we have to look at a new corrective structure, okay, aside the one that we've been looking at. All right, so the expectation was that price was going to move down to break below this 2-4 connecting line of the diagonal, and they'll be able to find an entry with stop loss a little bit above the key zone, a little bit above the 161.6 diagonal invalid level. That was one entry method I talked about, and then the second one was finding an entry inside this zone, right, with the stop loss above, or at least significantly away, maybe at the top of wave 2. That was those are the two entry method that I discussed. And if we're able to take in the first one, of course, it will still be valid, which I'm going to show us what we're currently having on the chart now. So if you're able to trade inside the zone, the stop loss will still be above, it will still be valid. All right, but if you waited for the price to break below this 2-4 line, that means we will not be having an entry at the moment. Okay, so let's look at what we currently have on the chart. So currently what we have right now is this Euro Japan. This is the Euro Japan that we'll be talking about. We've just been able to adjust this level a little bit higher to just cover some of this other important point here. And of course, we've also been able to adjust our labeling, okay, since price was able to violate the diagonal. So we just kind of label it a little so as to just accommodate what the market is doing, okay, at the moment. Okay, so but if you're able to find an entry inside the zone, you'll still be in the trade, definitely, maybe in a little bit of profit at the moment. Of course, it's still nothing until price is able to move downward, okay. But let's look at the corrective structure we're having. So instead of the zigzag we look at the other time, A, B, C, we were able to look at this as a double zigzag. Why? All right, so we have W here, which is a zigzag pattern, or maybe even a double zigzag itself, and then the X, which is a proper zigzag pattern, 5 down, 3 up, 5 down. This is an ending diagonal, and then we have this ABC, which is another zigzag right there. This is impulsive and this is impulsive, 1 2 3 4 5. And also be able to see a divergence. Unlike the other one, we didn't get a divergence. You can see that was the other one we talked about. That was even why I was kind of discouraged about trading in the zone, okay. So there is a divergence now, which means that we can be more confident about this going down, but we still have to see how that happen, or whether that is going to happen or not. So with what we have now, what should we do? Like I said before, if you have been able to find an entry inside this zone here, right, and your stop loss is maybe at the top of the wave 2 or at the top of the wave 5, sorry, at the top of the first leg of the wave 1, right, it's still a good trade, definitely. Once price breaks below, you can adjust your stop loss to the top here, which means you've caught a whole lot, okay, from the risks that you have on the table. And that's one of the advantages of trading in the zone, okay. But if you are trading in the zone, make sure your stop loss is at a very good distance away, okay. So if the price breaks downward like this, such trader can in fact add to their trades. Okay, because if we have another correction, they can either sell at the pullback or just sell the next breakout after correction. Okay, while the stop loss is now going to be adjusted to this level. So that's how they can take the trade down, 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 down until they're able to close all of the trading profit. That if the price move as expected. Okay, but for those who are waiting for price to make reaction, I think we are having an head and shoulder here. This is the first shoulder, this is the head, and this is the second shoulder. Once we see price break below here, right below the neckline, that is going to be another entry point with stop loss at some distance away from here. Okay, stop loss could be maybe around 162.15, and the entry could be around 160.54 or 0.50. Okay, while we'll take the target around 155 to 152. So 152, 150, these are going to be the key target if you are able to get an entry into this trade and price is able to move downwards. So this is a typical class book Elliott wave setup. Okay, and let's see how price is able to what we're able to get from here. All right, of course, some of you might be asking me, what do we have any other entry means aside the ones I've discussed? Of course, yes. Once price break below the neckline, you can wait for a pullback. Okay, sell there, or just wait for price to break downwards and sell. This one is more of looking for multiple, I mean, more evidences. Okay, just waiting for price to do more of its stuff before you find an entry. Okay, just a way of not trying to rush into it. But anyway, whether you sell at this breakout here, let's see, 30 minutes, the head and shoulder here. So whether you sell here once price break below this head and shoulder with stop loss here, or you wait for price to move downwards before looking for a pullback to sell at retracement is good, or you wait for retracement and then wait for the breakout to sell again, it's all good. Those are different entry methods we can find here. And then let's just see how it goes. I'm going to share more update with you, and thank you very much for watching this. I will appreciate if you can like this video and subscribe to the channel so that you can get notified of more videos like this. I'm going to share more trade setups with you. Thank you very much for watching. I'm going to see you in the next one. Bye.